Hey guys, how to trade top-down trading strategy. In this video I will share with you 3 great examples of top-down trading setups. We will discuss all the steps that I go through, from analysis to trade planning and management. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. And in this video, we'll discuss 3 absolutely different markets. We will discuss one currency pair, we will discuss one cryptocurrency pair, and we will discuss silver. I made such a selection simply because I want to show you that top-down trading strategy works everywhere. It doesn't really matter what do you trade, whether you trade stocks, forex, commodities, crypto. I just want to show you that top-down trading strategy works everywhere. So let's start with the forex pair. Hey guys, don't miss a big summer sale on my premium educational group. Until Sunday you can get a lifetime access to the group with the 40% discount. You will get lifetime access to my daily live streams, you will get ebook with my trading strategy and the video course, and as a big bonus, you will get a lifetime access to my signals group. For more info, check my website. It is vasilytrader.com/private group, the link in the description below, or text me in one of the social networks, I will give you more details. Don't miss your chance, traders. I want to start our analysis with the pound cat pair. And traders, first thing to note about top-down analysis is that we always start with the higher time frame, and the main time frame for us is the daily time frame. On a daily time frame, our task is to identify a current market trend, and then our task is to identify key levels, the points from where we will try to catch this market trend. So on a pound cat pair, I guess it is clear that the market is trading in a bearish trend, and for a quite long period of time, the market is falling. Now analyzing a price action, analyzing how the price acted in the past, we may spot right here a very nice trend line. You can see that after the price set new lows, it retraced to the trend line, and from that trend line in the past we see very strong bearish reactions. And take a look what happened with the market recently. The market recently reached that trend line, yes, and you can see that we already see quite strong bearish reaction from that trend line. So that is the first part of a top-down analysis. We analyzed pound cat on a daily. We discussed that the market is trading in a bearish trend, and just recently it reached the trend line from where we can expect a bearish trend continuation. Then our task is to look for a confirmation. Our task is to analyze lower time frames and look for some confirmation of our predictions. Analyzing lower time frames, we will analyze the reaction of the price to the structure that we spotted on a higher time frame, and then we will be looking for confirmation of our predictions. If we open an hourly time frame, traders, if we analyze hourly time frame together, let's check what happened here with the pair. You can see that once the market reached our trend line, the market retraced, then we bounced at a low high, then we dropped and we respected the same structure. You can see that for some time the market was coiling right here. Why the market was coiling? Look left at structure. Looking left at structure, you can see that right here on the left we have very strong intraday structure support, and you can see that for some time buyers were buying from that. And now, taking that into consideration, traders, we may spot right here a very peculiar pattern. Take a look. The price was respecting that horizontal support, and at the same time the market was setting low highs. Yes, you can see that here we had very nice lower highs. So here we have a perfect example of a descending triangle formation. Yes, a classic bearish pattern. Yes, the price was respecting this support. The price bounced from that support, and each time it set new low high. And what is our confirmation right here? Is the pattern by itself is a confirmation? No, the confirmation that we are looking for is a breakout of some minor structure. Yes, and our minor structure right here is that intraday structure that the market respected. Yes, and from where we saw thus minor retracements. So our confirmation is the breakout of that structure. And take a look, traders, what happened just recently. The price finally broke that structure. The price broke that strong support, and it tells us that sellers are willing to sell. Sellers are willing to break strong structures. Yes. And how do we trade once we see the confirmation? We just sell the retest of a broken structure. Yes. Once the structure is broken, we sell its retest. We set our stop loss above the key level that is spotted on a higher time frame. Yes, and our key level is the vertical trend line that we spotted in daily. We set a stop loss above that, and because the trend is bearish, we expect a bearish trend continuation to it currently. Yes, that is how our trade looks like right here. Also, we can start protection of our position from some minor structure that we see, and we see some minor structure right here. So once that structure is reached, we simply move our stop to entry and make our position risk-free. Yes, it is a very nice trend following trade, and you can see that once we spotted a trend line, we simply were analyzing the reaction of the price to the trend line on lower time frames. We spotted this bearish triangle, and then we spotted the breakout of the support of the triangle. Yes, and its retest gave us a perfect point to sell from. The second example will be on Litecoin, and we are on a daily time frame again. And again, first task is to identify current market trend. You can see that the market is bearish. We are trading in a bearish trend, and once the price reached a new low, once the price set a new low recently, we retraced. We retraced, and currently Litecoin is trading on a key level. Yes, you can see that in the past it was our previous low, and now the market is approaching that low. And of course, if in the past it was a support, after the breakout the structure turned into resistance. So from here we will look for a confirmation to sell, and you can see that on a daily time frame we already see right here a doji candle. Yes, as we know, doji candle on the key level is a very positive bearish clear. Let's now open lower time frames and look for a confirmation. Let's discuss what can be our confirmation to sell. You can see that approaching our key level, the market formed right here a classic double top formation. Yes, and this the pattern by itself is the confirmation. Now remember that similar to pound cat pair, our confirmation is the breakout of some minor structure. And our minor structure here is based on the neckline of this double top, but also it is based on that minor horizontal structure here on the left. Yes, so that is the buyer's zone for now. You can see that from that area, buyers are buying right now. And in order to confirm the strength of bears, we need a bearish breakout of that area to the downside. Our plan right here is to patiently wait for a 4-hour candle close below that support, and only then the coming bearish rally will be confirmed. We will then sell on a retest. Yes, we will sell on a retest. We will set our stop loss above the highs of the pattern. Yes, and we will expect a bearish movement to current lows. Yeah, so let's discuss how our trade will look like right here. Yes, shorting from here after the breakout, setting our stop loss above the highs. Here will be our target based on the candle closes right here. Yeah, so if on a pound cat pair we already have a confirmed breakout of the minor structure, Here the structure still is not broken. Here we are still waiting for our confirmation to short. So let's see how the setup will play out right here on Litecoin. Now let's discuss silver. And again, traders, we should start our analysis with the higher time frame, with the daily time frame. On the daily time frame, again, the first conclusion that we can make analyzing the price action is the fact that the market is trading in a bearish trend, right? Then you can see that once the market reached that structure level, the market retraced. The market retraced all the way up to a very strong daily supply area. Yes, you can see that in the past it was a very strong support, and you can see how many times in a row the market respected that. But after the breakout, it turned into resistance, and you can see how strong bearish pressure we see from that. Now zooming in the chart. Zooming in the chart, you can see that for some time, silver was ranging. Yes, we were trading within this horizontal range. The market was consolidating. And last week, the market broke the support of the range to the downside. Yes, we got a confirmed breakout of that. Then retesting that, you can see that the market went a bit higher. But right here, you can see that we have a very peculiar daily structure. Yes, you can see how nicely the market was respecting that structure. So definitely somewhere from here, we were looking for shorting. With my students, we were looking for shorting opportunities from that area, and we were looking for a confirmation. So let me show you what confirmation we spotted right here. Let's open the 4-hour time frame. Let's take away everything and focus on the price action. Do you see, traders, any pattern right here? Do you see any price action pattern right here? Here I see a perfect example of a head and shoulders pattern. Do you see this one right here? Here's our left shoulder. Here's our head. Here goes our right shoulder. Yes, very cute head and shoulders pattern right here. And again, the pattern by itself does not predict that the market will drop. The confirmation that we need to confirm a coming bearish movement is the breakout of the neckline of the head and shoulders pattern. Yes, we need the 4-hour candle close below that to confirm a breakout. Then we will sell on a retest. And after the retest, where the market will most likely go? The market will go all the way down to a current structure level. Yes, here it goes. It will be a trend following trade again. And shorting on a retest, we will set our stop loss above the head right here. Why above the head? Because the level of the right shoulder and the level of the head are almost equal. Yes, so in such a situation, it is better to set the stop loss above the head. And here will be our initial target for the trade. Again, first we need the breakout of the neckline of the head and shoulders. We need the 4-hour candle close below. Only then coming bearish rally is confirmed and we will short on a retest. Alright, traders, so that is how we treat top-down analysis. I hope that you enjoyed this video, and if something is not clear, remember that you can always ask your questions in the comment section. I always reply, so don't be shy and ask. Also, traders, don't forget that it is a summer sale right now on my premium group, and until Sunday you can get a lifetime access with a 40% discount. Please check the link in the description below. Finally, traders, please like this video, subscribe to my YouTube channel, and I will see you on weekend.